So after a four-session winning streak, the JSE seeing some pullback today. Resources, as I said, coming under pressure. Your reading of the markets picture today?
I think it's very much a case of biding its time until the ECB decision comes out this afternoon. Volumes are relatively thin. I think not just in South Africa is the market's waiting for the ECB decision. It seems to be a worldwide holding pattern at the moment. So I think there's very little to be read into any of the action that we're seeing today. And it really is this afternoon more a case of by how much will the ECB raise its rates rather than if it will. I think the consensus is pretty much out there that the rates will be increased. The consensus is at 25 basis points, but there are some pundits out there that believe they might even come up with as much as 50. We're still very much in the 25 basis point camp.
Of course, we are also looking forward to seeing what kind of rhetoric it's accompanied by. So whether or not this lends to the argument that we are going to be seeing further tightening down the line.
Absolutely, because up until now, Trichet has been saying that this is not to be seen as the start of necessarily a tightening cycle and just the first of many increases. Although most market pundits don't really believe that, they do believe that this will be the first of many increases, and I think that's part of the reason why there's a little bit of a tussle going on in terms of how much the increase will be today. We also had Portugal today actually confirming that they will be needing assistance, financial assistance from the EU. I think most market commentators are actually quite pleased that Portugal has admitted it. They had a very successful bond auction yesterday, although the rates were at relatively high levels, but it was oversubscribed, and I think that does bode well. But the market pleased that Portugal has admitted that they will actually need some sort of bailout or assistance from the EU, the third country in Europe to do so.
With much of that rate expectation already having been priced into the euro, we've seen some pullback in the euro and also some weakness, albeit slight, filter through to the rand as well. What are you making of the currency movement we're seeing?
Well, yes, weakness, but of very, very strong levels. What we find quite interesting is that in the first 3 months of this year, we saw quite a lot of selling out of our local equity and bond markets, overall to the tune of around $13 billion. In this first week of April, being the second quarter of this year, there's been quite a strong turnaround to that picture, especially within the equity market. And up until yesterday, we saw net inflows of 2.2 billion rand into our equity market and also some inflows into the bond market. We find that quite interesting because I think it does indicate that despite elevated levels of risk around the world, the market has become to sort of digest all the activities that is ongoing, what the risks in the Middle East, what the risks in Japan, how that all translates into the investment scenario, and that they are prepared to put some risk on the table in certain emerging markets, South Africa of course being one of those. So we had the reserves coming out of the reserve picture coming out of the Reserve Bank this morning as well. And what we saw there is that the Reserve Bank has certainly been active in trying to put some sort of level on, or not a level on the rand, but certainly some sort of limit in terms of the strengthening of that. And although they were successful in that during the first quarter, it's interesting to see that just in this first week already the rand has strengthened again.
Well, Nerina, it's been pretty quiet on the news flow front, but a bit trickling through. We had Mondi up 1.65% after it announced a planned spin-off of its South African packaging business with the intent of then issuing that under a new name down the line. What have you made of the move? Because we've currently got now Mondi trading 0.6% to the downside and really in line with that broad market trend.
Yes, I don't think that it's really sort of market moving news, but I do find it quite interesting. I think if Mondi was still a holding of Anglo American, I think Anglo certainly would have unbundled the packaging business separately, and I think it's probably fair to assess that the packaging side of the business is not a core part of Mondi's business. Paper and packaging really follow slightly different cycles through the economic cycle, and I think it makes a lot of sense to list these two businesses as separate businesses, as they are often driven by very different fundamentals. The paper business for Mondi also, of course, not just based in South Africa, whereas the packaging business is a South African-based business, and therefore I think it would make a lot of sense to separate these two out, demerge them, and offer the investors the opportunity to invest in them separately.
In the meantime, hardly surprising, Old Mutual also closing up to 0.1%, 1% rather, to the upside at this stage, and that after it's confirmed that it's completed the sale of its US life business to Harbinger Group, and as I said, that was just confirmation that the market was waiting for.
Yes, it is the confirmation, and I think the good performance out of Old Mutual today, basically the best performer out of the top 40 shares, I think really is the market saying to Old Mutual, well done for actually getting a deal done. There's been a lot of skepticism lately in terms of Old Mutual's ability to actually finalise deals, and I think this is a vote of confidence, a stamp of approval by the market to Old Mutual, and it's, although largely as expected, I think the increase in the share price really just gives you the sentiment of the market around that deal.
It's really financials as a whole doing well today. We've got ABSA and Nedbank joining Old Mutual amongst the top 3 on the top 40 in performance today. Is it a matter of it all being relative, though, to where we had the resources sector powered ahead yesterday, and so the pullback we're seeing on that front only natural?
I think it is a little bit of that. As I say, relatively thin volume, so I don't think too much should be read into the movement so far today. I think in the case of Nedbank, it might very well be that some market pundits are saying, with some rumours doing the rounds, if Old Mutual was able to actually conclude this deal in the US, it can now turn its attention again to the potential sale of Nedbank, and maybe some of those rumours have got more weight than previously thought. I think that might be reading a little bit too much into it, but I think just maybe some general rebalancing of portfolios going on today, really just a holding pattern until the ECB rate announcement this afternoon.
Harmony down over 1%, Anglo down 1.2%, Goldfields as well, close to 1% to the downside. The gold players really under pressure today, but bias overall seems to be leaning for that gold price to edge higher given the inflationary outlook globally. What's your outlook on that front?
I think gold has certainly had a spectacular run in the last couple of weeks, and I think if we do see some weakness in those gold stocks today, it probably is a little bit of profit taking more than anything else. I think it is also a reflection of that slightly less risk averseness that we've seen in the market over the last couple of days. So the gold shares and the gold price have certainly been the beneficiary of the heightened level of risk averseness in the market, and I think what we're seeing today is just a little bit of easing in terms of that outlook for gold. But longer term, I think gold still remains sort of the safe haven status, and certainly the hedge against inflation for many people as well.